What if a country decided, not a company, not a fund, but a country itself would add Bitcoin to its treasury and make it legal tender? In 2021, El Salvador did exactly that. Welcome to DCA Crypto. Today we'll tell the story of President Nayib Bukele's bold experiment, why El Salvador legalized Bitcoin, how the country implemented a nation-scale DCA plan, and 3 lessons every DCA investor should take away. Nayib Bukele, a former mayor turned president, rose rapidly in Salvadoran politics by promising change. In 2021, he announced a controversial move to make Bitcoin legal tender alongside the US dollar. The law passed in Congress amid international debate, and El Salvador moved quickly from idea to implementation. But Bukele didn't stop at legal status. He and his government set up a national strategy. Buy Bitcoin consistently, essentially a national DC. The key elements were simple but bold. Make Bitcoin legal tender, develop a government wallet and app called Chivo to enable payments, and adopt a purchasing policy. The government publicly announced it would buy 1 BTC per day as resources permitted. This wasn't a coordinated institutional purchase like a corporate treasury buy. It was public, frequent, and symbolic. The daily purchases sent a message. The country would accumulate Bitcoin over time, regardless of short-term price swings. The move drew praise from crypto supporters and criticism from others. International lenders raised concerns. Credit agencies flagged risks, and many Salvadorans worried about volatility and adoption friction. On the ground, adoption was mixed. Chivo faced early technical problems. Merchants had questions, but over time, remittance flows and tourism experiments showed potential benefits, and the government touted the long-term vision. What makes El Salvador's approach interesting for DCA investors is its psychology, a public, disciplined plan to buy regularly regardless of price. That's the essence of DCA, and Bukele turned it into national policy. You don't avoid volatility by timing. You lower the average entry price over time, and you build conviction through consistency. A country doing this amplifies the message. DCA is a long-game strategy, even at scale. Did it work? Depends on the metric. In price terms, BTC swung wildly after 2021. Some of the government's purchases happened near local highs and suffered drawdowns. But the experiment was never purely about short-term gains. More importantly, it catalyzed conversation. Global governments, companies and citizens watched a real-world test of Bitcoin as money in reserve. It forced debates on custody, regulation, financial inclusion, and technology readiness. Now, let's dive into 3 practical lessons for DCA crypto viewers. 1. DCA scales. Whether you're an individual or an institution, regular buying smooths volatility and builds position over time. The principle holds at any scale. El Salvador's experiment showed that the core concept of dollar-cost averaging isn't limited to retail investors. A nation can apply the same strategy, demonstrating the flexibility and scalability of DCA as an investment approach. 2. Implementation matters. Chivo showed that payments, UX, and custody are as important as the headline purchase. Good DCA plans include safe custody and user-friendly tools. The rollout of El Salvador's national Bitcoin wallet highlighted the critical importance of user experience and secure storage solutions. Even with government backing, technical glitches and usability issues can hinder adoption and undermine confidence in a DCA strategy. 3. Be ready for controversy. Bold experiments attract pushback. If you follow a long-term plan, prepare for volatility, public scrutiny, and policy risk. El Salvador's decision faced criticism from international financial institutions, concerns from credit rating agencies, and skepticism from its own citizens. This underscores the importance of conviction and preparedness when implementing a DCA strategy, especially one that challenges conventional financial norms. El Salvador's Bitcoin experiment taught the world something simple. DCA is not just a tactic, it's a discipline. A nation that commits to buying regularly sends a signal, and you can apply that discipline personally. The country's approach to Bitcoin acquisition mirrors the core principles of DCA that individual investors can follow. Consistency, long-term perspective, and resilience in the face of market volatility. By making Bitcoin legal tender and committing to regular purchases, El Salvador essentially created a national-scale case study in dollar-cost averaging. This move brought the concept of DCA from the realm of personal finance into national economic policy, sparking global discussions about the role of cryptocurrencies in government reserves and everyday transactions. The challenges faced by El Salvador, from technical issues with the Chivo wallet to regulatory concerns and public skepticism, serve as valuable lessons for DCA practitioners at all levels. They highlight the need for robust infrastructure, clear communication, and a well-thought-out implementation strategy when adopting a DCA approach, whether for personal investment or larger-scale initiatives. Moreover, El Salvador's experiment underscores the potential of DCA as a strategy for navigating the volatile cryptocurrency market. By committing to regular purchases regardless of price fluctuations, the country demonstrated how DCA can potentially mitigate the impact of short-term market swings, while building a substantial position over time. The global attention drawn by El Salvador's Bitcoin adoption also illustrates how bold financial strategies can catalyze broader conversations about monetary policy, financial inclusion, and the future of currency. For individual DCA investors, this serves as a reminder of the broader context in which their investment decisions exist, and the potential for widespread adoption of cryptocurrencies to reshape financial landscapes. While the long-term outcomes of El Salvador's Bitcoin experiment remain to be seen, its approach offers valuable insights for DCA crypto viewers. It reinforces the importance of consistency, the need for robust implementation, and the value of maintaining conviction in the face of skepticism and volatility. For those considering or already practicing DCA, El Salvador's national strategy provides a unique perspective on scaling this investment approach. It demonstrates that the principles of DCA regular purchases, long-term outlook, and resilience to short-term price movements can be applied at any scale, from individual portfolios to national treasuries. The experiment also highlights the potential for DCA strategies to drive innovation and change in financial systems. By committing to regular Bitcoin purchases and integrating cryptocurrency into its national economy, El Salvador has pushed the boundaries of what is possible in terms of monetary policy and financial technology adoption. As we continue to watch El Salvador's Bitcoin journey unfold, it's clear that the lessons learned extend far beyond national borders. For DCA crypto viewers, this case study offers a wealth of insights into the practical application of dollar-cost averaging in the cryptocurrency space, the challenges of implementation, and the potential for DCA strategies to drive significant change. If this video helped you think differently about DCA, like, subscribe to DCA Crypto, and share this with one friend who's skeptical. Next week, a practical step-by-step guide to set up an automated weekly Bitcoin DCA without complicated tech. See you then.